taking a look at the current economy, but also taking a look at some of the impacts that the globe is facing, especially when you look at the macro elements, along with a lot of the key things that are happening here in the markets today, from banking crisis to what we're seeing with the CPI numbers. There's a lot happening right now that affect the way you invest. So we're going to try to break all that down for you today. My name is Paul Barron. Welcome back into Tech Path. Joining me today is Mr. Peter Schiff. Not much of an introduction needed. I think everybody knows Peter. But he is, of course, representing Euro Pacific Asset Management. Check out europac.com. It's one of his websites out there. And of course, you probably know him from Schiff Gold. So thanks a lot for stopping in on the show today. We appreciate it.
Oh, thanks for inviting me to stop by.
We'll have some coffee and relax a little bit, but let's get into some of the details of where the markets are going. I want to get into a little bit of the CPI data that just recently came in this week, and what your thoughts are of how the Fed may interpret that data and maybe some of the things that you think will happen next. Your thoughts?
Well, the Fed may try to use the general interpretation of that data as an excuse to pause its rate hiking. It's probably been looking for an excuse to do that for a while. And so I think it may try to hang its hat on the CPI numbers that are not quite as bad as they were. But if you look at the numbers, we're still looking at 5-6% inflation as measured by the CPI, which I think understates by design just how big the price increases actually are. So if the CPI says 5, it's more likely 10. So we have pretty high inflation, even if it's not as high as it was last year or 2021. But also, I think probably more significantly is the improvement that we've seen in the inflation numbers, where they've come down a bit. I think that's transitory. I think that by the end of this year, or certainly by next year, we're going to see the numbers getting bigger again, and that ultimately we're going to eclipse the peak of year-over-year CPI that we've already seen. So inflation is not conquered, not even close. I think this cycle is just getting started, and we're going to see new highs in the year-over-year inflation rates.
So Peter, let's unpack that for a minute, because there's a lot of people that believe that this cycle might be, in reference to high inflation, might be, kind of getting on its tail end. Your theory is that this is just maybe a bump in the road. It lulls down. We're going to see a continued hike. What would be some of the contributing factors that would aid in, especially in inflation, continuing to rise? Let's say we get to 5 now, maybe we go down even into the 4s on the next print. What would be some of the critical things that would have to happen for us to see a rise in inflation again?
Yeah, first of all, the inflation that we're currently dealing with, the Fed has been creating it for more than a decade. You really have to go back to quantitative easing 1 in 2008, 2009. That's where the Fed really started the money printing in earnest. And we're dealing with the delayed consequences of that now. I mean, inflation by definition is an expansion of the money supply. And so we dramatically expanded the money supply. The consequence of that is prices have to now adjust to a higher equilibrium, given all the money that's now available to buy stuff. And so we've just started that adjustment process. And I think prices have a long way to go on the upside just to catch up to the inflation that's already been created. But I think paradoxically, one of the reasons that I think the CPI numbers are going to spike to new highs soon is all of this optimism that inflation is cooling down has caused the dollar to drop. And I think the dollar will continue to fall. It's now down about 15% from its high last year. But I think it's on the precipice of another major decline. I wouldn't be surprised to see another 15 to 20% drop in the dollar between now and the end of the year. And I think that dollar weakness, which is a consequence of people starting to price out some of the rate hikes that they had priced in fact, starting to price in the next round of rate cuts. Also, the Fed has quietly returned to quantitative easing while pretending they're still doing quantitative tightening. So all this is dollar negative. And what's going to happen as the dollar weakens, that's going to push up commodity prices across the board, oil in particular, but lots of other commodities are now going to be breaking out to new highs. And it was the pullback in those commodities that help bring down the headline inflation numbers. But I think when they start soaring to new highs on the back of a weak dollar, that's going to help drive those CPI numbers to make new highs.
All right, so some implications that this would start to trigger some effects of everything from real estate, some of the trailing effects that we've already seen in the economy. Obviously, the banking system is part of this. And what we saw with Silicon Valley Bank, obviously Silvergate, others that have had some challenges, and now even more if you push in Credit Suisse, Deutsche Bank, et cetera.
Mhm.
Do you feel like the banking system is now safe, or do you feel like we're going to continue to see some challenges because of this pressure in the markets as it is?
No, the entire system is insolvent. I mean, thanks to government guarantees and government insured deposits and the moral hazard that that created, and the fact that for better than a decade, banks were encouraged by regulators to load up on treasuries and mortgage-backed
Mhm.
securities, which they now own. And now that the Fed has finally raised rates, you know, this portfolio is underwater. So banks are sitting on huge losses that they're not really marking to market because they're pretending they're going to hold these securities to maturity. But they really don't have the ability to do that because the customers are going to want their money back
Right.
because the money is losing value to inflation. And they want to take that money and do something else with it. I mean, some people might want to just buy treasuries and loan it to the government at 4 or 5% rather than leave it in the bank at close to 0%. So the banks are going to have to sell these securities, and they have huge losses, which they can't absorb. And so they're going to rely on the Fed as a crutch. They're going to try to deposit these underwater securities for par at the Federal Reserve, and then use that money to repay depositors. But the banking system is a disaster. And your point about are bank deposits safe? No, they're not safe at all. They're in grave danger. There are two possibilities for your bank account. Neither of them is good. One is that your bank fails and you lose your money, right, or a portion of the money that you have on deposit. Alternatively, your bank doesn't fail because the government has bailed it out. And the only way that they could bail it out is if the Fed prints enough money to cover the cost, in which case you don't lose your money. It's still there in the bank, but it just loses a lot of its value, maybe most of its value. So, yes, you can go withdraw it, but then take it to the grocery store. You're not going to be able to put much in your cart because prices are going to go up dramatically as a reflection of the loss of value of the dollar because the Fed has to print so money to bail out the banks.
Okay, so Peter, I mean, you look at this and from a common, whether it's a person that's in business, they've got to have a certain amount of money in the bank just for handling general everyday expenses. And then you've already seen a flight, what I feel like is a little bit of a flight to safety when we've seen this downtrend of deposits moving now into traditional money market accounts or T-bills, et cetera. Now maybe even into gold, because obviously gold now at its all-time high, if you look at the chart today, still covering over the 2000 mark. And all of this seems interestingly timed with what's happening with the US dollar. Based on your theory and your analysis, if you look at the de-dollarization of the US dollar and what that might look like globally, you see what's happening with China and the EU, which I feel like there seems to be a little bit of bedfellows occurring right now. How long do you feel like that cycle could take for a full, where the global reserve starts to get parity, much like when we saw the dollar and the pound kind of global reserve? What do you think that cycle is in terms of time?
Yeah, I think it's going to happen a lot quicker than people think. I mean, it's already taken a long time. We've been kicking the can down the road on this for many, many years. So it's long overdue. But, there's an old expression, how did you go broke? Well, slowly at first, and then all of a sudden. And I think that describes what's been going on with the United States. And I think that when the dollar crashes, it's going to happen abruptly. And the dollar's reserve status is going to be lost before anybody realizes that it's happened. And I think that the writing is there on the wall for anybody who wants to take the time to read it. If you look at some of the events that have taken place ever since we were foolish enough to weaponize the dollar and apply sanctions onto Putin, I think that really highlighted the need, a political need, for the
Yeah.
world to move away from the dollar. I think they already had an economic incentive to do so, but then we gave them a powerful political incentive to accelerate the process to de-dollarize, and that is exactly what's happening. And most people don't have a clue to the degree to which the United States depends on that dollar reserve status, because our
Hmm.
whole economy is built around a service sector. But without imports, there's nothing to service. I mean, we're just a gigantic logistics center where we distribute merchandise that we import and then distribute it to the population. But if we can't import all the goods, well, then there's nothing left to distribute. I mean, the whole thing comes collapsing down. And how do we pay for $1 trillion a year worth of imports with our dollars? That's our trade
Yeah.
deficit. It's $1 trillion a year in goods. And we pay for it just by printing money. But the money doesn't cost anything to print, it's free. But all those goods require the expenditure of significant resources. Land, labor, capital goes into the production of these goods, and we basically get them for nothing off of the reserve status of the dollar. And the foreigners who are selling us all this stuff, they just take our paper and they buy treasuries or they buy mortgage-backed securities. But when that stops and the dollar crashes, Americans are going to be too broke to afford to import stuff. And we don't have the capacity to produce what we'll no longer be able to afford to import. And so it's going to be a collapse in the American standard of living. And very few people are prepared for that. It's going to happen. You're going to see it through a massive depreciation in the value of the dollar. So, yeah, the smart money is buying gold. I mean, they've been buying gold for years because this train wreck was obvious for years. But now, it's happening. Gold is, I think, this morning at 2,040. I think
Hmm.
it's headed significantly higher from here, multiples of its current price. And if people were smart, they would take their money out of the bank, their long-term savings. I mean, obviously, if you need money in the bank to pay bills, short-term operating cash, yeah, leave it there. But for longer term, don't leave any long-term savings in the bank, because you're going to lose it. Either the bank's going to fail or the money's going to fail. But either way, you're going to lose. So you got to take your money out of the bank and do something else with it. You could buy gold and silver because it's much, I think, safer than owning cash. Or you can invest it. That's what I've done. I mean, I have both. I have gold and silver, but for myself and my clients, we own good dividend paying value stocks all around the world. These
Yeah.
are real assets that are going to retain their value as money loses its value. And if you own a good business that has real assets and that sells products and services that customers need, then you can raise your prices and you can maintain your margins in an inflationary environment, and you can raise your dividends, which is what I'm counting on. And since the income that the companies that I invest in are earning is coming from outside the United States predominantly, so it's coming in other currencies, which I
Hmm.
expect to rise versus the dollar, then my dividends will go up for that reason as well, as you translate them back into cheaper dollars.
All right, so there's some things there I want to unpack. First is the idea of the fast descent of the dollar value, and when that does occur in the United States, the kind of impact that will have globally is going to be pretty dramatic, including all of our trading partners possibly moving around. Now, if you look at some of the charts we've shown here on this show over the past few weeks, is China's move into trading partners. 20 years ago, China was barely a trading partner with most of the globe. Now they are pretty much a dominant trading partner with almost every country around the globe. That, of course, in itself, the United States has been a very significant growth vehicle for China's GDP, as well as just the overall structure of their society. If our consumption society, and I say ours, meaning the United States, if the consumption society goes away and we're not able to actually pay for those goods, what does it do to the number two country in the world?
Well, I think that's going to be a huge win for China, because it's not like we've been doing any favors to China by taking all their stuff off their hands.
Mhm.
They could use that stuff. The key to growing your standard of living is production, is to increase the supply of goods and services available to your own people, not to just produce a bunch of goods for some other country's citizens to enjoy. And so what's going to happen when the dollar crashes in relation to the Chinese currency? then as Americans become poorer, the Chinese automatically become richer.
Yeah.
And now the Chinese will buy the products that Chinese factories and Chinese workers are producing. And so instead of just getting our paper in exchange for their labor, they're going to get to keep all their stuff. And so they're going to get to enjoy the consumption of all those goods that they were doing without, because the fruits of their labor were being shipped over to the United States and they were getting stuck with it with a piece of paper. So, but on the other hand, on our side of the Pacific, we're going to be stuck with our paper. We're not going to have all those goods that we used to be able to buy. We're just going to have a bunch of paper and nothing to buy. Right? So prices go way up. We get stuck with a bunch of inflation, and the Chinese get a higher standard of living because now they have more stuff to consume themselves. Now, they won't consume it all themselves. They'll trade more with other countries, but the countries that they will trade with will be countries that have goods that they need that they can import in exchange for their exports. So they're going to work to earn products, not work to earn U.S. Treasury bonds or our mortgage-backed securities. But the world has been propping up the American economy for decades. We have had a giant subsidy, and we've given the bill to the rest of the world. And I think the part of the world that has suffered the most, the cost of this subsidy, has been the emerging markets. And I think the emerging market consumers are going to get the most relief from America's collapse.
Interesting statement there. And if there was anything that the United States could do to try to right the ship in terms of productivity, possibly onshoring manufacturing, trying to get back into the 1960s, in essence, where the United States was pretty much a self-suppliant or reliant company or country. Is there any hope for that, do you feel, or do you think we are so far gone in this scenario right now that the United States could not necessarily? I mean, this is the greatest world of opportunity, or greatest country in the world in terms of opportunity, greatest innovation, greatest ideas, smartest, I would say, the smartest minds in industry. Why would that not be able to be recovered if we were checked against the glass?
Well, we could do the right thing. And in fact, doing the right thing, would be not nearly as difficult as it might have been in the past. In fact, I'm very excited about what's happening with artificial intelligence, and that may make the process of reindustrializing easier and more efficient for the United States. But the biggest problem is that we're our own worst enemy, and we have to overcome democracy. And a lot of people think that democracy is a good thing, but it actually is a pretty bad thing, especially if you need to make fundamental changes in the structure of an economy, because the political forces will be pushing back against that because it requires significant cuts to government spending. And nobody is willing to do that, especially when it comes to middle-class entitlements like Social Security and Medicare that need to be cut. See, unless we can shrink the cost of government, we can't deliver relief to the economy in the form of lower taxes or lower inflation. Because right now, the way we're paying for all this government is through taxation and inflation. And so if we want lower inflation and lower taxes, which is what we're going to need to reindustrialize, we have to dramatically cut government spending. But no politician is willing to do that because they're worried that they'll lose their next election, because people will use those spending cuts against them, and so they'll be voted out of office. And so most American politicians care much more about their own reelection than they do about the country they're supposedly elected to serve. And so it's very difficult. Meanwhile, most people are dependent on government now. They get a check from the government in one form or another, and they've been so dumbed down by American public school system, government schools. They don't understand free market capitalism. There are a bunch of socialists now that are voting in these polls. And it's very possible that when we get this huge economic collapse that's coming, the politicians will blame it on capitalism. They'll say, you see what happens when you have profit and greedy businessmen? They wrecked the economy in 2008, and now they wrecked it even more. And it may end up being a springboard to go all in on socialism, and for the United States to completely jettison what remains of our free market system, destroy the rest of our Constitution, and become a totalitarian, centrally planned regime, something like, Cuba, And so we could be going down a very, very dark path as a result of what's going to happen. They had hyperinflation in Germany and they ended up with the Nazis and Adolf Hitler. So, bad things can happen, in the type of economic environment that we could find ourselves in. But yes, if we did the right things, then yes, we could have a amazing recovery, but it will take time. You just can't wave a wand and recreate all the factories that we lost and rebuild the supply chains and educate the workforce. This is going to take probably a generation, to rebuild what government destroyed. But the sooner we can get started, the sooner we could finish the process.
Okay, so a lot there as well, Peter. Great, bites for sure. I want to get into the element of regulation because when we look at regulation, whether you look at bank regulation, what we've already seen with, even if you look at Caitlin Long, what she was trying to do with Custodio, which is essentially a bank that goes a one-to-one on reserve to the dollar versus fractional reserve lending, that we've kind of put ourselves and poisoned our banking industry over time. You look at that, and then along with potentially digital assets and everything, we won't call Bitcoin a digital asset, but if you look at the potential of where maybe technology is rolling out around digital assets, let's just say tokenizing gold, okay? If you got to a point where maybe gold could be tokenized through some sort of technology where you had a reserve against it, a digital gold dollar, so to speak, which may happen with China and Russia at some point. They've been accumulating a lot of gold. Would you be for that or against that?
Well, first of all, deregulation is the low-hanging fruit because that doesn't cost the government any money. They can repeal all sorts of regulations that are undermining our productivity. So that's the easy thing to do. But of course, that's still difficult politically because, there's a whole class that benefits from that regulation, right, including all the people who are employed as regulators, right? And all the lawyers and accountants that make a lot of money off of all this unnecessary regulation, which is one of the reasons that we've outsourced so much of our industry to the rest of the world to avoid the costs of complying with all that regulation. And the regulation completely destroyed the banking system. We would have a much sounder banking system if it was regulated by the free market instead of by the government. But in answer to your question about gold-backed currencies, we have the technology to do that right now. I mean, that's existing. The biggest impediment is government regulation. Anti-money laundering, security regulation, all these government rules and regulations act as a barrier to entry because the government doesn't want competition with money. They want to maintain their monopoly on money, and their product stinks. It's fiat currency. It's backed by nothing. It's no good. The free market's alternative would be gold, which works great. And now with the internet and blockchain, it works better before because it's very easy to tokenize gold and then have those tokens available to the public to use as a medium of exchange, as a unit of account, as a store of value, as money that would be much more efficient in every single sense of the word than dollars or euros or yen. And so that's exactly where we should be going. And, I would applaud that. In fact, I'm going to be working to make that happen, to the extent that governments don't prevent it because they might. I mean, they could use their power and they have all the guns, right? They have to stop the competition, to preserve their monopoly and their ability to flood the world with their lousy fiat currencies.
Yeah. All right. So let's take a look at that for a second, because if we do look at the tokenization of other assets, obviously we've already seen this with Bitcoin happening in the essence of tokenizing some sort of digital asset. And you look at this statement right here you had was Bitcoin's crash as institutional adoption you think now is over. So you're thinking Bitcoin is institutional adoption is gone, Bitcoin is on its way down. Is that the only reason? Do you not feel that globally the citizens of the world have adopted what's happening within Bitcoin?
No, look, the problem with Bitcoin is you've tokenized nothing, right? So at least with gold, you tokenize something. Bitcoin can't work. I mean, yes, as long as there are people foolish enough to buy it, the price could go up. But eventually the people who are buying it are going to want to sell it because they don't want their Bitcoin. They want to buy things. They want to buy a car or a house, take a vacation, buy food. And the farmer doesn't want Bitcoin. The guy that's selling a car doesn't want your Bitcoin. So in order to buy anything with Bitcoin, you got to sell the Bitcoin. Well, now you need somebody else to buy it. Well, if you run out of buyers, then the whole thing implodes, right? That just like any pyramid or chain letter, I call it a blockchain letter. It's the same principle as a chain letter. So it doesn't work. In contrast to gold, right? Gold is a real commodity. There's always a market for gold. At any price, jewelers will buy gold. If gold is $5,000 an ounce, they're going to buy it. The electronic industry needs gold. If it's $5,000 an ounce, they're going to be buying it, right? There's always going to be buyers for gold. And central banks around the world, if I'm right, they're always going to be accumulating gold. They need gold as a reserve, especially if they move away from the dollar. So you always are going to have demand for gold. There's been demand for it for 5,000 years. And it's because of its actual properties as a metal that it's so valuable. Bitcoin's only properties is that people think they're going to get rich if they buy it. And they can only get rich if they buy it if there's a greater fool willing to pay a higher price. Now, yes, This thing has gone on for a decade. It's gone on longer than the tulip bubble. So, it's setting a record in longevity, but, it's still going to end in disaster. The reason I think that the institutional adoption is over is because, I think that was big in 2021. They kind of got in at the top. The institutions kind of put their toe in the water at $40,000, $50,000, $60,000 Bitcoin. And they don't like the temperature. Even though it's come back to 30,000, they had to ride it down to 16,000. I think they're gone. And now all the new rules and regulations that are coming on to the space, and I think a lot of these crypto companies are either bankrupt or headed for bankruptcy. I think the bloom is off that rose. I think the institutions that dip their toe in the water are not going to completely go in. They're done. And I think those that didn't put a toe in the water are glad that they didn't, and they're never going to go near there. I think all of the rally we're seeing now in crypto is coming from the people who have been in crypto the whole time. They're getting excited about what's happening with the Fed, about the financial crisis. And so they've pulled their offers. So they're not really selling. They're putting more money in. And it's a thin market. It's also a highly manipulated market. It's notorious for pump and dump. And I think that's what's going on. I think some of the major players are trying to buy more. A lot of the trades may just be, the whales kind of moving their crypto from wallet to wallet, but they're trying to get the price up because they're hoping that the higher price will attract in some more money. That, it's that momentum and that hype that might get people excited. But I think that ship has sailed. I think all the excitement was in 2021. That was the peak of the bubble. I just don't think they're going to be able to reignite that. And at some point, this, dead cat bounce is going to roll over. And I think Bitcoin is going to plunge at the same time that gold's going to be making new highs. I mean, I think gold's broken out. It's taking off. It's about to hit new all-time record highs. It's already hit all-time record highs in, pounds, in euros, in yen, and all these other currencies. We're just a few bucks away from an all-time high in the dollar. But then there's no resistance to the price of gold, and it's just going to keep on heading higher, especially when people recognize that the days of low inflation are over, as if we ever really had them. It was all a lie to begin with. But now they can't even lie about inflation anymore because it's so high. They can't hide it with their rigged CPI indexes. And the world is going to have to reprice gold much higher when it recognizes that inflation is going to be much, much higher than 2% for as far as the eye can see.
Yeah. I'm not here to debate you. Obviously, my background is in technology, so I track what's happening in the tech space. And when I look at the framework and infrastructure, what's happening around blockchain and kind of the future there, I've seen enough, in my years of being in Silicon Valley, seeing the growth of what we saw pre-dot-bomb and then post-dot-bomb. The likelihood of the blockchain industry, Web3, whatever you want to call it, is that there will be a big crash, there will be a recovery, and we will see companies come out of that will be absolutely the titans of the next phase. Technology evolves, whether it's AI generated or we see a lot of innovation in blockchain and how that may relate to the actual value of whether it's something like Bitcoin or others. And I've also invested enough in individual startups, angels, VCs, to understand that I can also go into investments like that where I get told the same thing, is that these things will never be anything. they're not valuable, there's no value there, and Amazon happens. This has happened so many times in the tech industry, so many times in the startup industry, that when I hear those kinds of statements, it just, to me, it sounds, like you haven't been and or seen the economy from a sense of how startups and innovation begins
Yeah,
and how
I'm not
nascent it is. It's
saying
only 12
that.
years old. Yeah.
Yeah, I'm not saying that blockchain and DeFi and all this has no future. What I'm saying is the cryptocurrencies have no future, at least the ones that are backed by nothing, that are just,
Well, that's
ditches.
the U.S. dollar
So,
is backed by nothing.
well, that's
Prior
that's a
to
big
that,
problem with the U.S.
yeah.
dollar. That's why we're looking for an
Well,
alternative. And so,
it had a 100-year run, so it did pretty good so
but
far.
it
And
started out backed by gold. That's what gave it its value.
Bretton
Bitcoin
Woods
didn't start
changed
out
that.
backed by anything. It just
Absolutely,
materialized.
but any
So
kind
look,
of monetary system is going to have the full faith of whatever population decides that faith is.
right, but
Gold made it
in
because it
order for
was.
right,
Go
but in
ahead.
order for a good to serve as money, before it becomes money, it needs to be a good in and of itself. There has to be some demand and use and need for
I
that
know that
object
I know
before it can
that's
be
the
monetized.
thought of the last 500 years, but I don't think that's the thought of the next 500 years. And
Well,
to
you
me,
know, I
that
everybody always thinks this time it's different. They think that
well,
they've
it's not this
reinvented
time.
something.
This is the first time. There's
No, no,
been
it's
no
not the
time
first time.
before. What was the
This is
first
not
time?
the first pyramid or the first Ponzi or the first bubble. There have been many of them. But again, I don't think that the industry has no future. It's just that the future is going to involve the tokenization of real things. Whether it's
Very
gold and
possible.
silver to
Yes.
be money, or whether it's other securities to maybe bypass exchanges. So maybe ownership of stocks could be tokenized. Maybe real
Tokenized.
estate could
Yep.
be tokenized. Ownerships of automobiles and other things. So there certainly could be a lot in the future
Totally
of
agree
this
with
technology.
that.
I
We're
just
on the
don't
same
think
page.
right now you've got thousands of, literally like 20,000 worthless fiat cryptocurrencies that have just been conjured into existence that have no actual value or use other than the fact that people buy them to bet that the price goes up. And so it's a gigantic casino and everybody's
Well,
going to lose.
okay, so Peter, the idea behind that is that technology is born from ideas and innovation, and what we're dealing with right now in this side of innovation, especially in the blockchain space, when you look at tokenization and what that technology is going to look like, because I have this argument a lot with individuals coming into the space saying, "Well, there's no there yet," and I said, "Well, that's exactly what I've been told about 10 times in my life of being born an engineer." Going through Silicon Valley, then opening many businesses, investing in hundreds of businesses, and then understanding how businesses cycle into the next innovation and become something really special. So I think that's the question mark going forward. I know we're getting into and more of a debate on the value of an idea of tokenization. And I do believe maybe there could be another Bitcoin-like asset in the future, but I believe the tokenization idea is real. The technology that's going to essentially run that today, I don't even think it's been invented yet. Most likely it's sitting in a 5-year-old's head somewhere in kindergarten right now that will eventually evolve
Or
to
it's
where we're
going to
going to
be
go.
artificial intelligence that comes up with
That
it,
could
right?
be doing it, but that's going to be fed by an engineer, and the data is only as good as the input. So that's another conversation that I'd love to have with you. Anyway, we're going to get into the last questions to you. And I want to get into the idea of back to gold, because I want to stay on your wheelhouse. Because this is a thing that our audience asks all the time. Where are the potential opportunities for investment here? I bought gold for the first time here recently. And I said, okay, well, I'm going to step into that zone and let's
Did you
go
buy it
find
from
out.
Schiff Gold?
I did not, but now I feel like I'm going to have
Well,
to go
then you
do
might have
that from you.
overpaid. Buy it from us next time. Yeah.
All right, good. So when you look at China, this is a tweet right here. China's buying more gold while its FX reserves are rising. So when you look at China and Russia potentially flowing into using gold as a potential reserve to maybe their currencies or elements like that, how quickly do you feel that China and or Russia or the BRICS nations or others could essentially replace what their need is for the US dollar in terms of time? Is that just
Yeah. Well,
3 years, 5 years, 10 years?
look, they never really needed the dollar. They needed it like a hole in the head. They put themselves into a position where they needed it, but now they are extricating themselves from that position so that they no longer need it. They never really needed it, but they were using it anyway. But we gave them a number of reasons to get out of that position. And
Yeah.
they would be much better off if they held gold as their primary reserve rather than US dollars. And remember,
Mhm.
prior to Bretton Woods, all the countries held gold. That
Yep.
was
Yep.
everybody's reserve. And then when Bretton Woods came around, the reason that everybody decided to hold dollars was because the dollar was backed by gold and convertible into gold at a set ratio. Every $35 got you an ounce of gold. So if you were a foreign central bank and you held $35, you held an ounce of gold, right? So, and we were on that system until 1971. And then the US defaulted on its commitment. And so for 50 years, we've been on this crazy fiat system. And I think it's coming to an end. And I think the world is going to go back to what existed prior to 1971, which is gold being the primary reserve, just without the US dollar as an intermediary.
Yeah.
And so these countries are going to have gold. And that's much better because gold is not simultaneously somebody else's liability. It's a real asset. Nobody can sanction your gold. Nobody can take your gold away from you, assuming you store it yourself. So if China and Russia have their gold reserves in their country and the Chinese decide to do something that America doesn't like, well, America has no retaliation financially.
Exactly.
They
Yeah.
can't do, America can't do what it did to Russia and Putin. And so people want to put themselves in a position where they're not beholden to the whims of American politicians, but also they don't want to have to loan all this money to the US government. They don't want to
Yeah.
have these huge trade deficits with the United States when their own citizens would be better off consuming all that stuff themselves.
Yeah, for sure. I was listening to, I don't know if you have ever listened to or heard Thomas Sowell before, but he had an
That's
interview,
brilliant.
brilliant financial guy. He had an interview about, I guess it was about a decade ago, and he was basically talking about the Fed, basically just killing the Fed. And the interviewer asked him, well, what would you replace it with? In the system, in essence, he looked at it and said, well, what would you replace cancer with? It's not that it needs replacing. There's a new
Exactly.
system out there that somebody is going to figure out, I think, going
Look,
forward.
he
The
is a
interesting thing
brilliant
is,
man. I've been a fan of his and reading his material since I was a teenager. That's how
yeah,
long he's been around and how
yeah,
long I've known about him. But he's a
pretty amazing.
giant as far as I'm concerned. He's a brilliant guy. I wish more people knew about him. Unfortunately, he's old now, so I'm not sure how much
Yeah,
longer we'll be able to benefit from him. But people can always go back. His books are excellent.
his
They
his
will
books,
be here for
even his
centuries.
videos that
Yeah,
are just gemmed with gold, in the essence of
yeah.
just value. So definitely cool. Peter, it's been great having you on the show. Thank you so much. We're going to go to a poll real quick just to let the audience kind of see what they had to say about today's episode. Let's take a look. Are you more likely to invest in gold if it was tokenized through crypto? That's an interesting aspect. So 52% says they would do something if tokenization through crypto was done with gold. Interesting. Huh. 48 says no. Well, anyway, that's typical of our audience, split down the middle, it seems like anymore. Peter, it's been great having you on the show. Thank you so much for stopping in. We appreciate it.
Hey, my pleasure. Take care.
You bet. All right, so you guys are tuned in. Maybe we're in the audio podcast right now. Jump over here to the YouTube channel. This is where you catch a lot of these kinds of, discussions and I think insights, because the key here is really understanding what the global impact is going to be on you, your own family, your own investments, and really kind of your framework. And remember, everybody's investments are different and your need is different. So hopefully this has been just a granule of information that can help you, in your search and quest for financial stability or just happiness, whatever that might be. Understanding technology and finance is going to be the key thing. That's what TechPath does. So make sure and stick around for more shows. All you have to do is smash the like button. And also, if you're not a subscriber, just click that little button right there, hit subscribe, and ting the bell. That will give you notifications of when we go live like this with guys like Peter Schiff. So if you guys want to reach me, it's very simple. Just reach me out there on Twitter @Paul Barron. We'll catch you next time right here on TechPath.